Ever wondered why a trader will start Forex trading today, and in the next month, they are thinking of quitting already?
Well, that's because things didn't work out.
Alright, ever wondered why a Forex trader will be trading the market for more than 3 years without any good results, zero achievement, and no Bugatti or a Lambo packed in their property?
I'm not gonna lie, that sounds like me. Trading Chief, please tell me why.
Okay, that's because a lot of traders are trading the Forex market the wrong way, including the ones that call themselves pro. The truth is that the trading market is not all about understanding Japanese candlesticks, chart patterns, and different trading structures, or knowing all the psychology in the market and all those old stuff. It's about coming into the game with a new perspective, with a game plan that is built to make you stand out from the market, following the real working principles that will give you an edge in the market. And after 9 years of trading, I can tell you what works and what does not work in the market. So if you are starting Forex trading today and you want to grow your small trading account, you can be able to do so if you follow all the principles that I will be showing you in this video. These principles have proven to work all the time in the market and guaranteed to help any trader to be able to grow their small trading accounts fast. But before we get into all of that, do well to like this video to help other traders like you discover it and also become profitable, and subscribe to our channel if you are encountering us for the first time. So my tribe soldiers, let's get down into this business. The first thing you have to do if you are starting Forex trading as a beginner and you want to grow your small trading account is that you have to bring everything down. You have to come down to the smaller time frames. I know there is this sweet rush amongst traders. Each time they are trading with a higher time frame, they feel like they are doing something off high level. They feel like that is the professional level. But let's be sincere with ourselves. It's not the 4 hours and the daily time frame that will take you to Dubai or Miami. The fact that you are analyzing the weekly time frame to check for the overall trend direction does not mean that you are going to make a profit in the market. Now listen, even the ones with the biggest bag in the Forex market don't even trade the higher time frames. In fact, many of them don't run a top-down analysis from the higher time frames. They focus on a single smaller time frame, and that's it. They keep making thousands of dollars every single day. I know a trader who makes hundreds of thousands of dollars every day with only the 5 minutes time frame. So a professional trader with a lot of money in his account, trading a big account, is taking his risk from the 5 minutes time frame. But here is a beginner with $50 in his account, analyzing the 4-hour time frame and trying to take an entry from the 4-hour candle. After listening to motivational speakers and inspired by some animation videos, but before you know it, account is gone. He thinks Forex is a scam again, but welcome back to reality. If you want to grow your small trading account, you must begin to focus on the smaller time frames. Not only will they give you a lesser and manageable risk on your trades, but they will also give you more opportunities to trade the market. It gets better when you begin to focus on only one time frame, from the 15 minutes to the 1 minute time frame. Never trade a higher time frame if you are managing a small account. And now that we know that, the next thing that I see a lot of traders do, especially the beginners, is that they are trading with a very low risk to reward ratio. When you see a trade like this, this is not good. This is a very bad risk to reward ratio. Let's imagine you are risking 10% of your account on this trade. Calculating based on this risk to reward ratio, at the end of the trade, it is only going to give you 10% of your account back. And that's if the trade goes well. Even if you win the trade with this type of ratio, you will still be going backwards. It will take only a few losing trades to wipe everything out. Very few losing trades. But take a look at this trade. This is a very beautiful risk to reward ratio. When you trade like this, there is nothing stopping you from elevating in the market. Look at the risk and look at the reward. When you take a trade like this and it goes well, you are guaranteed to make at least more than 3 to 5 times your risk. Although it takes a good trading strategy to pull this off, but don't worry, I will be teaching you that same strategy before the end of this video, and I am not here to teach you all these things because you are ready to listen. This is my trading life. I am teaching you the exact same thing that I do every single time that I want to take a trade in the market. I drop all my trades in my Telegram channel, so if you want to see how I trade the market in real time, head over to the link in the description box and click it. Now, your trading ratio may not be exactly as the one that you can see on the chart right now, but the truth is that if you want to grow your trading accounts fast, your reward must take a bigger space than your risk. With this kind of plan, even if you win 5 out of 10 trades, your winning trades will cover up for every loss that you take, giving you an edge to elevate in the market. When you come to the market with a plan like this, even the market will know that you are up to something, and you are not here to play at all. The next principle works with a concept I call responsible over-leveraging. Let me ask you a question real quick. Now, what will you do if you are 100% sure that this trade is going to move up from this point to this point, and you know that in no way will this trade come back to this area again, and if at all it comes back to this zone and then breaks this zone, then the movement is no longer valid. You have backtested this multiple times on the chart, you have traded it many times on your demo account, and you have been able to make a lot of profits on it. What will you do? Honestly, I don't know what you think, but if I was the one and I met the trade at this entry level, this is exactly what I will do. And let's say I am risking $10 on this trade. I will hit this trade with a strong leverage, so that when it triggers, my trade will be calculated in a way that I will lose only $10, and it will be exactly at that point where the market becomes invalid if it trades beyond it, and then I place my take profit target at my expected profit zone. So, if the trade gets invalid, it will hit my stop loss at the validity zone, and if it goes my way, I will be making a whole lot of profits in my trade. I term this as responsible over-leveraging. This is the type of over-leveraging that deals with accuracy. Notice that I did not place my stop loss some few pips below the validity zone. I placed it exactly below the validity zone, so if the trade gets invalid, it will also take me out of the trade immediately. No extra pips lost, but this can only work with a great trading strategy. And that trading strategy I will be revealing to you right now. This trading strategy is very simple, but follow me carefully. This strategy is called the flip support and resistance strategy. This occurs when the market breaks out of a support or a resistance zone and then flip it to the opposing power. For example, when we have a resistance zone here and the market wants to flip this resistance zone to a support zone, it will first of all break out of the resistance zone, and then the resistance zone now flips and becomes a support zone. It's like an army taking over a military basement and then launching their weapons from that basement. So the buyers have overtaken the sellers at this breakout and have taken over this basement, which we no longer call a resistance zone, but a support zone. At this point the flip is complete, so we wait for the price to return back to this support zone, and then we take a trade from there. But still, we are not going to be trading blindly, only because the market touched the support zone. We wait for a bullish momentum candle to appear, and after that we can take the trade, placing our stop loss below the bullish candle and our take profit target at the next high. Now, based on the principles that I gave you all earlier, this trade ticks all of them. First of all, we are taking a very low risk trade when we place our stop loss below this momentum candlestick, and for the ratio, we have a high reward ratio on this, giving us more space to make a lot of profits in the market. So what is left for you is to find a leverage that matches your risk. And then you enter the market with full force and grow your trading account. Make sure you are only targeting Great risk to reward ratio setups, like this one. Do not go for small trades like this one. Make sure that every trade is worth trading, else you don't take it. And as you can see here, the take profit target was hit successfully, giving you massive profits if you took part in the trade. Now, let's take a look at a bearish setup. Alright, on the chart here, you can see that the market broke a support zone, flipping the support zone into a resistance zone. Remember the psychology I taught you guys about the army basement? So now, when price returns to this zone and forms a bearish momentum candle, we can take the trade, placing our stop loss below the momentum candle and our take profit target at the next low. And as you can see, this trade is another wonderful example of all the principles that we have learnt in this video combined. And to crown it all, the take profit target was hit successfully, making it a very great trade if you had taken it. Now, everything that you have learnt in this video will take time and practice and effective backtesting to perfect them. Don't go using them on your real account immediately and then make mistakes and say the trading chief taught you to do so. Perfection comes from consistent practice. In this video, I taught you on how you can grow your small trading account as a beginner in Forex trading. In the next video that will pop on your screen right now, I will be teaching you on how to learn Forex trading so fast that it feels illegal. No need to wait for 3 years to learn the Forex market. You can now do it in less than 1 month if you follow everything that I will be teaching you in this video right now. See you there, my tribe soldiers.